Nobody's born incredible. People who do incredible things simply took the right steps. This is our journey. This is the hunt for incredible.
All right, guys, welcome to another episode of The Report Saturday edition. And I got a very special co-host today. I got my man, Mr. Gideon Spencer. Gideon, welcome to the show, man.
Thank you so much, Rich. Stoked to be here.
Yeah, dude. And I'm super excited. You and Jacqueline just moved out here to San Diego from San Antonio. And you're part of our boutique hotel mastermind. And dude, I'm just excited for you guys to be out here. You guys are making some moves in the space, and excited about our podcast today.
Yeah, man, super stoked. It's been great building a lot of momentum. So joining your mastermind, I think it was 5 months ago. I mean, it's crazy how much life can change within a 6-month period if you just go all in, give it a full send.
Yeah, no, absolutely. What's been your biggest takeaway thus far?
Oh man, well, the weather's hard to beat. I think that's most people's takeaway right out the gate, but also the people in the community, like getting plugged in with your mastermind, your meetup, and just like the friends and relationships that we've built has been really profound. Like just getting inspired by everybody moving and building momentum. It's really great.
Yeah. And you guys basically have like a almost an accepted offer, right?
Yeah.
You guys are working on a deal. We have a PSA that's out there pending. Should be signed here soon on 24-unit boutique hotel up in Central California. Talk a little bit about that.
Yeah. So basically, I ended up partnering with a couple people in the mastermind, and we were going full steam ahead on the California coast, as well as some areas in Colorado and Utah. And Alex, one of our partners, he came across this deal just from having conversations with brokers, building rapport, using a lot of the credibility of the group too, which has been amazing because, like we mentioned, like the partnerships are so impactful in that group. And yeah, so we came across this off-market deal. We ran the numbers, it looked good, and going back and forth with the broker and having conversations with the seller, we found that the seller was actually in somewhat of a pickle. So his mother-in-law was managing the property, and so she had some health concerns, and so they wanted to move her out. And so it was just a really great opportune moment where the seller was being willing to be reasonable and we were willing to move quickly. And so we were able to get a lot of the numbers squared away, and we're still going back and forth in negotiations, but it looks like where we're going to land is like in a great spot that's going to be good for everybody. So, I mean, we'll see going through the due diligence period. You know, we're being cautiously optimistic, not getting excited too early, but overall, yeah, really stoked.
Yeah. I love that, you guys are doing this together. You, Anthony, and Alex, I'm a huge fan of all you guys. And you guys are some of the folks in our group that are really moving the needle for everyone else. And it's exciting to see. I get fired up seeing you guys making moves in the space. And I'm super excited to see how this deal kind of comes to fruition. I think it's a great opportunity for you guys. But it is that area alone, Central Coast and in California, I think there's just a lot of growth in that area. And so I'm excited to kind of see how it plays out.
Yeah, 100%.
Yeah. So anyways, with that, I want to jump into our topic today. There's been a lot of talk, a lot of news about this new program that's being rolled out. And it's the 5% down Fannie Mae program that's rolling out here November 18th. 5% down now for all folks out there to be able to go purchase a multifamily property up to 4 units. I know you own a fourplex out in the San Antonio area. Talk a little bit about, what your experience is with what you've owned and kind of how this opportunity is going to shake out for folks out there.
Yeah, so I think this is a really, really big deal for people, especially the people that have been sitting on the sidelines saying, okay, I'm going to wait for interest rates to come back down, then I'll jump in the game. I think what this does is it'll create opportunities for people to be able to jump in with this high interest rate environment and hang on to a great asset so that once the interest rates go down, that property value is going to explode and then people can refi and all sorts of stuff that we can dive into. But my experience was we ended up buying a fourplex that was in a gray area. So it was super close to like where everything's popping in San Antonio. It's near an area called the Pearl and the Riverwalk. It's also right next to a military base, 4 universities, and 3 hospitals. So we have a lot of flexibility in terms of the midterm rental game. So the high season in San Antonio is in the summer, like in a lot of places. And then in the winter, when it slows down, we pivot to midterm rentals and have a really great tenant base. So being close to the military and hospitals, we're actually able to maintain really steady revenue, so we don't get impacted as much by the seasonality there. Now with that deal, the unfortunate bit is that we had to put 20% down. And even though we moved into it as a primary resident, so Jackie and I, we moved into the property and we did a lot of the renovations ourselves while we were working with contractors just to get a deeper understanding of like what that process looks like and to educate ourselves at an accelerated rate. And then and then so the property's been absolutely killing it, which is why we said, okay, we want to scale this up and get into like bigger assets. And that's when we came across you, and like everything about what you were doing and your brand and everything was so great that we really latched onto it. So now we're looking to scale up into boutique hotels.
Yeah, absolutely, man. And I think this program that's being rolled out right now, I really believe that this is a program that's going to really shortcut the path for the everyday person to become a millionaire. I think just house hacking alone is one of the easiest paths. But I mean, if you really think about it, 5% down on a fourplex. And if you're a real estate agent, I mean, you could literally roll your commission into the down payment and probably get into this thing for like 2% out of pocket. And maybe you live in one of the units for a while. Maybe you just live in one of the units for a little bit, and move out and rent out all four. But man, I mean, that thing's going to pay for itself. Early on, you might be a little bit negative cash flow, just based on where the rates are. But over time, rents go up, and like you alluded to, the rates will go back down. Eventually, you can refi into some cheaper debt, or maybe you don't refi for a while. But all that to say is, eventually this thing's going to pay itself down. And literally, if you don't do a thing, in 30 years, this thing's going to pay itself off, and that $1 million fourplex is now going to be worth $2 million, maybe more. And now all of a sudden, you got $2 million of net worth just sitting in this property.
Yeah, 100%. And not only that, but I think it's important that people consider that speed is important here. Like it's good to get in the game quickly because like we alluded to before, in a high interest rate environment, that compresses the prices. And so right now is a great time to buy because those prices are compressed. Once the interest rates go back down, the property values are going to explode. And I think what we're going to end up seeing is with being able to put such a small amount down on a property, we're going to start seeing more movement in the space of people who now they have greater purchasing power because they don't have to put as much down. And once people start buying those assets and there starts being more movement in the market, we could end up seeing an increase in those property values even before the interest rates go down. So all the people who are saying, okay, I'm going to wait till interest rates get better, I think waiting could be pretty risky, and right now is a great time. And I think this 5% down is opening up a lot of opportunities for people to start making that move.
You made a really good point, and I couldn't agree more. I think it's definitely going to put upward pressure on pricing for those fourplexes out there. But also, for the folks out there that, are sitting on the sidelines and they're listening to all the news and all the fear in the marketplace, and they're going to sit there and wait and see what happens before they take action, I think that's a huge mistake. I think right now there's not a ton of buyer competition. And so you can go and find these fourplexes in multiple markets in the country, and you can likely get into some of these deals without a ton of competition, which means you can, negotiate better pricing, you can negotiate better terms, and you could probably even negotiate the seller to cover some of your closing costs right now, which is huge, right? And so, and that's another thing that I've done before, and I encourage all the listeners to utilize this if you can. You can't do it in a hot market when there's 40 offers, but in a market like this where there's maybe no offers, you can negotiate the seller to cover your closing costs. And a simple way to do that is to request the seller to have some sort of seller credit into the contract. So let's just say you request a 2% seller credit. You can use those 2 points at closing to go towards your closing costs, which shortens the money out of pocket for you.
Yeah, totally. That's another thing is a lot of people, they feel like, okay, getting into real estate, buying a fourplex, you need so much money. But with some of those creative opportunities, it's really not that much to get into the game.
Yeah, man, I totally agree with all that. And so, I think get in now while there's no competition. You can refi a cheaper debt later. And then over time, like you said, all the demand, it's just going to drive pricing up.
What would you recommend for people who maybe they say, look, I see the opportunity, I want to make moves, but I don't have that capital in hand. How would you recommend they think about it with this opportunity?
I would say go get creative and figure out a way to get the capital, right? We're talking 5% down. You can negotiate the seller to cover your closing costs. So go find a property that's maybe more affordable. There's fourplexes out there in certain parts of the country that you can pick up for $300,000-$400,000. I mean, my first property was 11 unit building in Cincinnati for $350,000. I know there's good fourplexes out there for 400 or 500 grand, depending on where you are. I mean, how much did you pay for yours?
We bought it for 520K.
Okay. So in that example, 5% down on 520, you're looking at about $27,000, $28,000 down. Negotiate the seller to cover your closing costs, and then go get creative. Like there's ways to go get $25,000.
Right.
You know, go borrow it from a friend, go borrow it from a family member. If you don't have that, there's 0% credit cards out there. Go start an LLC and then start like a 0% business line of credit. That's another option. I mean, there's so many ways to go do it. Go sell something and make 25 grand, right? You know, so that's what I would do. What about you?
Yeah. So I mean, I'm thinking in a similar vein of thought. What I ended up doing was obsessively researching and studying. So I read 12 books within 4 months, just educating myself on the space and talking to everybody that I knew about it and showing that I was educated through those conversations while I was looking for deals and building rapport with people who did have capital. And then it actually turned out really well, because when we went to purchase the house, so it was actually like a big blunder with the lender. So originally they were saying,
Blender with the lender, I like that.
Yeah, they were saying you can put 3.5% down with FHA. And all the other lenders said, no, you can't do that. And so we were like, okay, well, we found a lender that said, no, trust me. Like I'm connected with people. I can get you a great rate with this small down payment. And it wasn't until a week before closing that she said, oh, we actually can't do it. And we have to do 20%. And we had budgeted across the board with like, okay, 3.5% down. And then we were going to put $100,000 into renovations. And yeah, so we ended up having to do a quick raise within a week. And fortunately, I had built rapport with the right people where I was able to turn around and raise 100 grand within a short period of time. But it was literally just because I was obsessively researching the space and I was talking to everybody I knew about what my strategy was, what I thought about the space, why I thought it was a good opportunity, and what this specific deal was. And so I was able to get that quick turnaround time. And so that's what I would recommend is, a lot of people, they say, oh, I don't have money. I don't know people who are connected. You can go to meetups. You can look up on the meetup app and see, like, most major cities will have real estate groups. Your Beers and Deals is a great meetup group. Like, just the last couple of times that I've gone to your meetup, I've met a handful of people that absolutely would fund a smaller deal like that if it made sense and if the person showed that they knew what they were talking about.
Absolutely. I love that you got creative there. Another method is, you know, most folks have a 401k or an IRA sitting around collecting dust. Like, go borrow against it. You can typically borrow up to 50% of your account balance or $50,000, whatever the lower number is of the two. But also go do a withdraw. I mean, shoot, if you only have $25,000, $30,000 in there, maybe it makes sense just to do a complete withdrawal. Go pay the penalties, go pay the taxes. They're not going to be due to the next calendar year, and then roll that into the deal.
Yeah, and this is such a sweet opportunity that you could even find an investor that invests in smaller multifamilies, and then see what their criteria is, and then you go hunt for deals. And then if you move into it and you make a deal with them, I mean, this 5% down is so hard to beat that it would be super simple if you know what you're talking about and you're able to move in and you make a deal with an investor to say, hey, look, if you put the 5% down, I'll move into it, make sure the renovations are good. And then maybe you take a small bit of equity, but at least it gets you in the game. Like, that first deal to break into the game is the most important one.
That's the true value. Like Michael Blanc says, you know, the law of the first deal, you know, just like whatever it takes to get in that first deal, go in knowing like, hey, it doesn't have to be a home run. It's likely not going to be a home run deal, but get in the game, and that deal is going to give you the confidence to go do a second deal. And that second deal is going to give you the confidence to go do a third deal. And so I agree with you, man. It's all about getting that first deal done. Let's talk a little bit about the logistics or requirements to qualify for this loan. So credit score wise, you only need a 620 credit score. That's pretty powerful. And then max loan amount of just under 1.4 million for a fourplex. So that allows you to go into most markets, maybe outside of like New York and San Diego. Even San Diego, you can get a fourplex out here for about that. If you go into some of these inland markets. And then it has to be a primary residence. So you have to live in the property for a little bit. But, you know, I didn't read those loan docs, but I hear a lot of folks out there say like, oh, you know, if it's a primary residence loan, you have to live in it for at least 12 months. But, you know, the loan docs that I've signed that are primary residence loan docs, those loan docs literally just say like, at the date of this signing, you have every intention to live in the property as a primary residence. Now, what happens after that? Like, these banks, these lenders, they understand plans change. People go through divorces. They get rerouted for their jobs and relocated. Like, things change, and they can't force you to live at a specific property. This is not prison, right? So as long as you're making your debt service payments, let's say you just want to move in for a month or two, as long as it's not in the loan doc information, there's a 12-month requirement. There's no issues with moving in for a month and then moving somewhere else.
100%. What my wife and I did is we bought the property and then we were fixing it up as we go, but we would take trips nonstop. So over the last year, I mean, we were nomads for a lot of that, but the property was our primary residence. Outside of that, we were just like traveling and staying in different places. So there's definitely flexibility in terms of what that contract says.
Yeah. And I agree with you. And you guys do some pretty cool traveling, by the way. Your Florence trip looks super cool.
Oh, that was an amazing time. We actually have a flight back. So when we bought a one-way over there and we stayed over there for a month, and then when we were purchasing our flights back, the round trips were actually cheaper.
Whoa.
So, I mean, who knows? We may be out there pretty soon again.
I like that. Yeah, that's one of my favorite cities in Italy. I definitely got to go back at some point. But anyways, all that to say, man, is like, with this loan product, I think this is going to change a lot of things. Hopefully it's here to stay. But that's another reason why you should get in, because this program is not guaranteed to be around forever.
Right.
So 5% down, buy a multifamily property, guaranteed path for the everyday person to become a millionaire, maybe a multimillionaire. That's a powerful thing.
Yeah, 100%. Not only that, but it could end up covering your rent. So even if nothing changes, but you run the numbers and you find an asset where the price works out, then you could be living there for free. I mean, that's what we did with the fourplex. Was when we were in town, that we stayed in one of the units and rent was totally paid for because we were renting out the other three.
Mm-hmm. And I'm going to take it a step further. I mean, you guys are doing this with yours, but living in the property for a little bit. Now you're short-term rentaling mostly in the property. You're doing some midterm stuff, but let's just say hypothetically someone was to short-term rental all four of those units, and they have a day job. The depreciation from that property, as long as the average guest stay for the calendar year is 7 nights or less, they would be allowed to use the depreciation from that property to offset all of their active income, such as a W-2 job. And just think about the tax savings right there. I mean, if you buy $1 million property, you do a cost seg study, you're probably going to have 35% depreciation. That's $350,000 you can use to offset your W-2 taxes. That's massive.
Totally. And when you factor that in, you could end up getting the asset for free, right?
Yeah.
It's like, let's say you buy a property for $500,000, you put 25 grand down to purchase it. Let's add another, $15K for closing costs and things like that. When you go to refinance, or when you go and you get a cost seg study done, and then you can get bonus appreciation, you can knock off 20 to 30 grand right there. So you basically just bought a $500,000 property for $10,000 out of pocket, and you're living rent free.
I just thought of an idea while you were saying that. So you were asking me earlier, like, if someone had no money, how could they get creative? Well, go borrow that money, pay that person a good return, and then the way to pay them back is from all the tax savings on the back end.
Yeah.
There you go.
Yeah.
That's easy.
And that's how you get a fourplex for free.
Yeah, go buy that. Go borrow 25 grand, give them a return, and then when you do your taxes that next year, you're going to save $25,000 in taxes. Use that money to pay them back.
Yeah.
Crazy. Anyway, so any other stipulations within this loan program that we haven't discussed that you can think of that might be beneficial for the listeners?
Now that I can think of, when I saw that report coming out and I started reading into the details, all I could think was go, 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 go. Like, jump on this right now.
Full send.
Full send. It looks like it could end up increasing the prices. So, I mean, the sooner people get in on this, the better.
Yeah. Yeah, I put out like an Instagram piece like a week ago, and everyone was like in there sharing it. And so I thought, okay, like people are interested in this topic. So I'm like, we gotta talk about this on the next Saturday edition. So I think it's a great opportunity out there for a lot of folks. So if you can qualify for this loan product, I think you got to take advantage. If you can't, go find someone that can and have them co-sign whatever it takes, make it happen. But I think if you get into a deal like this and you sit on it for 5, 10, 15, 20 years, you're going to make a ton of money.
Absolutely.
Anyways, well, with that, I think that concludes this episode of the Saturday edition. I know we got some sunshine here in California, San Diego this weekend. So I'm super excited for the weekend and excited to flip this around and come on your podcast here in a sec. Gideon, how can listeners learn more about you?
Yeah, so you can find me on all socials, Gideon Spencer _. I mostly post on Instagram, so be sure to follow there. And I have a podcast, The Hunt for Incredible, where we basically interview people who have done incredible things, which is why I'm stoked to have you on the podcast, Rich. And we basically look at how they did their incredible feat and what their mindset and actions were that enabled them to do that. So really breaking down what tools people use to become successful so that other people can apply it to their own life.
There it is. Go follow Gideon. Shoot him a follow. He's Gideon Spencer. I'm Rich Summers. Listeners, thanks for tuning in. We'll see you in the next one. Peace.
Peace.